Hello everyone and welcome back to our stock market learning channel. I hope you are doing well. Before we begin today's lesson, here is a quick disclaimer. This video is created purely for educational and informational purposes. I am not a SEBI registered investment advisor, research analyst or portfolio manager. The information shared in this video should not be considered investment advice or a recommendation to buy or sell any financial product. All investments are subject to market risks. Please do your own research and consult a SEBI registered financial advisor before making any investment decisions. Now, let's begin today's topic. Types of financial markets. In our previous videos, we learned about the stock market, its history, and why it is important. But here is an interesting question. Is the stock market the only financial market? The answer is no. The stock market is just one part of a much larger financial system called the financial market. To understand this easily, imagine visiting a large shopping mall. Inside the mall, you will find different stores. One store sells clothes, another sells electronics, another sells groceries. Each store serves a different purpose. Similarly, the financial market consists of different markets, and each one deals with a specific type of financial asset or transaction. Today, we will understand the four major types of financial markets. One is capital market, second one is money market, third one is commodity market, fourth one is foreign exchange, Forex market. Let's begin with the capital market. The capital market helps companies and governments raise money for a long term, such as expanding businesses, building factories, developing infrastructure, or launching new projects. For example, imagine a company wants to build a new manufacturing plant costing 5,000 crore. Instead of depending only on bank loans, the company can raise funds from investors through the capital market. The capital market has two major segments. The first segment is the equity market, commonly known as stock market. Here, companies issues shares to investor. When you buy a share, you become a small owner of that company. If the company performs well, the value of your investment may increase and you may also receive dividends. The second segment is the debt market. Instead of selling ownership, companies and governments borrow money from investors. In return, they promise to pay regular interest and repay the principal amount after a fixed period. The common example of a debt instrument is a bond. So remember, equity means ownership, debt means borrowing. Next is money market. Unlike the capital market, the money market is used for short term borrowing and lending, usually for a period of less than 1 year. The participants in this market are mainly banks, financial institutions, large corporates, government organizations. For example, if a bank needs funds for just a few days or a few months to manage its daily operations, it borrows money from the money market. The main objective of this market is to provide short term liquidity and maintain the smooth functioning of the financial system. Ordinary investors generally do not participate directly in the market. Now let's move to the commodity market. In this market, people trade physical commodities instead of company shares. Some common commodities include gold, silver, crude oil, copper, wheat, sugar, coffee, and cotton. Let's understand this with an example. Suppose a jewelry manufacturer believes that gold prices may rise in the coming months. To protect itself from future price increases, the company may purchase gold today. Similarly, farmers, manufacturers, exporters, and importers use the commodity market to reduce the risk of fluctuating prices. So, this market plays a vital role in managing price risk. The fourth type is the foreign exchange market, commonly known as Forex market. This market is used for buying and selling the currency of different countries. Some examples: Indian rupee, US dollar, euro, Japanese yen, British pound. For example, suppose an Indian company imports machinery from the United States. Since the supplier accepts payment in US dollars, the the Indian company must convert Indian rupees into US dollars. This exchange of one currency for another takes place in the forex market. Interestingly, the forex market is the largest and most liquid financial market in the world, with the trading taking place almost 24 hours a day across different countries. Let's quickly revise that we have learned today. Capital market used for long-term investments and fundraising through shares and bonds. Money market used for short-term borrowing and lending, mainly by banks, financial institutions, companies, and governments. Commodity market used to trade physical goods like gold, silver, crude oil, wheat, coffee, and cotton. Forex market used for buying and selling the currencies of different countries. Here is a simple trick to remember all four market. Shares is equal to capital market, short term fund is equal to money market, gold, oil, and agricultural products is equal to commodity market, rupee, dollar, and other currencies is equal to forex market. Remember this 4 points, and you will never be confused about the different types of financial market. The financial market is not just about buying and selling shares. It is a complete financial ecosystem where different markets serve different purposes. The capital market supports long-term growth, the money market manages short-term financial needs, the commodity market helps business manage price risk, and the forex market enables international trade and global business. Understanding this market is the first step toward becoming a knowledgeable investor. I hope today's session helped you clearly understand the types of financial markets. In our next video, we will continue our stock market learning journey with another important topic. If you found this video helpful, please like this video, share it with your friends and family, and subscribe to our channel. Don't forget to press the bell icon so you never miss our upcoming lessons. Thank you for watching. See you in the next class. Happy learning and happy investing.